and welcome to another edition of our Journey to Financial Freedom. I am Sheila Wilkinson-Sanders, and we are continuing on this journey of building wealth. In our last edition, we started talking about moving from being an employee to being an entrepreneur. And we talked about being a sole proprietor. But as you move through this journey, as in building your businesses, plural businesses, because remember, to be wealthy, you have to have multiple streams of income. So as you put together your plan, think about the fact that right now there may be just one venture that you are focusing on. But over time, as you build your empire is going to include multiple businesses. And so I want to spend a little time today talking to you about business structures. We talked about having a sole proprietorship where it's just you. But as you build your businesses, you're going to have to determine how you're going to incorporate those businesses. We talked about the sole proprietorship where it's just you. So that's the easiest business structure to establish because there's not a lot of paperwork or anything that you have to do. You just start your business, right? The disadvantage is that all that income is your income. It's on you solely. So you want to start thinking about incorporating. So the next simplest business structure after the sole proprietorship is a partnership, and that's usually where there's more than one person involved. There's 2, there's 5, there's 10 people involved. And it's pretty simple to establish. You get an EIN number from the IRS. You can do it in about 5 minutes online, getting your tax ID number. You'll want to decide on a business name, and you'll want to register that business name with your state. So you want to very quickly, as you're thinking about business names, as you're sitting there strategizing, have your state website up so you can do a search and see if that name is even available in your state. Now, talking about states, as you start talking about incorporating, you want to determine what state you're going to be doing business in and what state you want to incorporate in. A lot of people incorporate in Delaware and in Nevada because it's easier, it's cheaper, there's not the taxes associated there are in other states. But remember, as you are establishing your business in certain states and you want to investigate what the requirements are for that state. In some states, you actually have to have a business address in that state, or your registered agent needs to be in that state. But if you're doing business in a certain state, for example, in Illinois, you have to then register that business in that state. And so you may be in another state in what they call a foreign entity, meaning that you aren't a member of that state, but you then also have to file reports in the state you're doing business in. So I know I'm getting a little complicated here, but I just want you to make sure that you're educated on the entire thing. So you always hear these things about incorporating in certain states because it's cheaper, it's easier, so on and so forth, but also understand the laws in the state that you're going to do business in and what the requirements are there. And the more complicated the business is, the more complicated the paperwork is. So, with a partnership, you get your tax ID number, you register with your state, but the taxes are filed individually by each partner. So you want to then start thinking about a corporate structure. And so the next easiest structure as far as paperwork goes is a limited liability company. Now, people do that because, just as the name says, they want to limit their liability individually. They want to limit their risk individually. And so those are one of the advantages to having um, an LLC, limited liability corporation. Again, you have to incorporate in the state you're doing business in, but you have to do a little bit more now when you start to establish a corporation. You have to do articles of incorporation. You have to, for an LLC, you have to do an operating agreement that specifies how the business will operate, who manages the business, who are the members that make decisions, who are the decision makers of the business. But again, that income is the income of the individuals. Now, you go into a corporate structure. So you go into a CCorp, and in a CCorp, you still do the articles of incorporation, but you actually issue shares of stock. You have to have a board of directors. You have to have annual meetings. You have to have minutes. And all of this is recorded with the state that you're doing business in. The other disadvantage to having a corporation, a C Corp if you will, is that you have what they call double taxation, in that the business is taxed and then the dividends and the income that are passed on to the shareholders are then taxed. So that's what they call double taxation. But again, you have all the advantages of having the write-offs with that business structure. So you get around that double taxation as a small business with an S Corp. And with an S Corp, then you don't have that double taxation. You have the pass-through. So the corporation does an informational return with the government, and the income, the net income, is passed on to the shareholders. Now, I am just touching the surface here. If this sounds complicated, it is, and it gets more complicated. And so this is a real example of where it is crucial that you have your professionals working with you. You need to absolutely have an attorney, a business attorney. So, if you have an attorney that did your real estate transaction or did your estate or did your divorce, they may or may not be the right professional for you. You need to find out, are they a business attorney, and do they understand all the different aspects and why you do one structure versus another structure. You want to have a good accountant, a good business accountant. You want to have a good tax accountant. This is where having a business tax accountant, someone that does business taxes and understands all the different aspects of business taxation, that works with you, that can help you through understanding what structure to have depending on what type of business you're doing. You may be patterning yourself after a similar business that has similar products and services, and you may ask them their business structure and say, okay, oh, they established an LLC, I should do an LLC. Well, you have to look at that whole picture, your whole business plan, your whole entire goals, what it is you're trying to accomplish long term when determining that business structure. So it's crucial that you have those professionals there that know and understand that aspect of the business to help you in determining those business structures. But I just wanted to give you a sense of some of the things that you need to take into consideration as you're putting together your business plan, and as you're starting to start that business. Determining and establishing that business structure is critical. I hope this has been helpful. Remember to stay faithful. Remember to stay focused. Remember to stay committed. I'm Sheila Wilkinson-Sanders. Let's all have a wonderfully blessed and supreme week as we move forward.